Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market essentially failed at the 74 to 76 resistance area from yesterday, and the break below 68 to 70 confirmed the sellers back in short-term control, which led to a test of the 55 half to 57 half support, where so far we've seen responsive buyers active in the market. Heading into the open, the overnight bias is quite bearish, and that bearishness can lead to more selling off the open here. How the market reacts to the 56 half to 58 half area is going to be a pretty good tell. By default, we're going to expect the sellers to continue to be active in the market for a move down at least into the 51 to 52 initial support. And that zone is really more of a downside objective at this point, and we'll have to be cautious and figure out whether it's worthwhile to initiate a long there in real time, because a failure at 56 half to 58 half could easily bring the 45.75 to 47.75 support into play, at which point responsive buyers can start to be active in the market yet again. And in the event of some extreme selling, we can test 40 half to 42 half, which still marks a larger time frame area of support, and we expect responsive buyers to be active there. Same goes for the 32 half to 35 half area. So off the open, we're going to be watching how the market behaves at yesterday's low, 59 half, and pre-market resistance, 63 half to 65 half. Holding below 63 half to 65 half would leave the sell side in firm control on the smaller time frames, and eventually that can lead to a break of pre-market support for a test of 51 to 52. And like I said, we'll have to interpret and read the market in real time to figure out whether it's worthwhile to fade that zone. The way it's shaping up right now, it looks like it's better to use that zone as a target rather than an area to go long. On the upside, a break above 63 half to 65 half would tell us that the buyers are stepping back in, and perhaps from there we can just balance within yesterday's range. So we can still get sell side active at the resistance zones above, but a breakout above 63 half, 65 half would tell us that, this is not quite as bearish as perhaps it seemed in the overnight session. And from there we can go up and test 68, 69, 72, and the 74 quarter, 76 quarter resistance zone where sell side can still be active. But, given the overnight market structure, which is fairly bearish, and it also took place on above average volume, and the market right now is running on above average volume, so that means we can get some pretty decent intraday volatility on the day time frame here. We're going to give more edge to the sell side below 63 half to 65 half. As long as we're holding below that area, sellers can still be active and eventually result in a breakdown and a test of 51.52, 45.75 to 47.75, and possibly 40 half to 42 half, at which point buyers can start to become more active in the market yet again. So those were the main ideas heading into the open. The focus early in the session is going to be more on the short side. We're going to be cautious on long setups. It doesn't mean that we can't consider long setups. It's just that we have to actually see something. We have to see either the buyer stepping in or a disconnect in the internals or a lack of downside momentum, something, a clear-cut sign that the market is not in all-out liquidation mode. So in order to go long off the open, we actually need to, see some signals. But by default, the focus will remain on short side in anticipation of a break of pre-market support, a test of 51 to 52, and possibly the two zones below that as well. That's something, again, we'll have to interpret and determine in real time. So those are the main ideas heading into the open. Also keep an eye on the overnight VPOC. That level is also going to be a nice short-term tell. If you are, breaking below it with some conviction in the S&P and the Nasdaq, then that tells you something. that the sellers are being quite aggressive. And right now, at the moment, the overnight VPOC is 2060 quarter. That could change over the next 30 minutes, but holding below 2060 quarter would be a confirmation that sellers are quite dominant. In Nasdaq right now, the overnight VPOC is 43.38, and a break below that area would signal sellers in firm control in that market as well. And that'll be another nice heads up that perhaps we are now going to put in another short-term directional move lower. So how the markets behave at the overnight VPOCs today is going to be a nice signal as well. And if we're holding above the overnight VPOCs and eventually break out above the pre-market resistance, then that is where we need to adjust our bias from bearish to much more neutral. So those are the main thoughts. Let's see how the markets behave at their respective overnight VPOCs. Let's see how ES behaves at pre-market support, 59.5 pre-market resistance. That's going to help determine the bias on the day, and we'll take it from there.